everyone, welcome to another episode of In Conversation, my advisor coach. Today in conversation, our guest is Mr. Rohan Korde, Fund Manager, Equity with ITI Mutual Fund. Rohan has been with ITI Mutual Fund since June of 2019 and has over 18 years of experience in capital markets. Welcome, Rohan, to In Conversation, my advisor coach.
Hi, good morning. My pleasure being over here.
So, Rohan, just to begin and know you more, if you could just provide your background and about your investment management journey.
Yep. So I've been involved in the investment research process for more than 18 years. My initial years were spent on the sell side, tracking the auto ancillary and mid cap and small cap space. For the past 5 years, I've been working with ITI Mutual Fund. I joined initially as a senior research analyst, and a year down the line, I became a fund manager. I'm the fund manager currently for the mid cap fund, the value fund, and I'm also co-fund manager on multiple other schemes as well. So it's been a great journey over here at ITI Mutual Fund, and the transition from an analyst to fund manager has been particularly satisfying.
Wonderful, wonderful to know that. So completely from the analyst on the investment management side.
Yep.
Wonderful. So Rohan, ITI Mutual Fund is launching their ITI large and mid cap a new fund offer on 21st of August this month. So could you tell our viewers, the strategy behind this fund, why a large and mid cap fund at this point of time?
Yeah, so what we have seen, if I just step back a bit, then despite all the global challenges and the lingering after effects of COVID, despite all the challenges, India was able to rise in the fifth position in the global, as far as global GDP was concerned, and this was outside the top 10, 11th in the past decade. So we had tremendous economic growth, even in the face of adversity, multiple challenges, and a tough external environment. And this advancement came as the economy got more formalized due to policy measures. We saw increased mainstreaming of businesses. We saw multiple policy initiatives being taken to encourage manufacturing in India, enhancement of infrastructure, more investments towards the long-term nation building. All this helped the overall growth of the nation. But despite all this progress, we are still trailing GDP as far as GDP per capita is concerned, behind most of the developed markets, definitely, but also the emerging
True.
markets.
True.
So the potential for India's economic growth remains substantial. And what we believe is that we need to recognize these growth opportunities and stay invested in these companies from the initial phase, from the outset to the very end of the story, or the very part where the story becomes kind of a stable play over a period of time. So a large and mid cap fund will help us firstly capture the stories at an initial phase and stay invested over the long term. Even when the mid cap becomes a large cap, we can stay invested in these kind of companies which have high growth potential. Secondly, the large and mid cap fund will also help us weather the market volatility better. It is the second largest category, and what we have seen is that the returns are mostly consistent for the large and mid cap space over a period of time. So we feel that it becomes a prudent investment option at this time of the market, and by combining both large cap and mid cap stocks, we can capture the growth in the markets for Indian markets for the long term period.
Sure. And by the way, it happens to be one of my most favorite categories, the large and mid cap funds.
That's nice to know.
So, Rohan, what we have observed in the past, few months and year, that ITI mutual fund equity funds have given a superlative performance, correct? And so we would like to know what is the secret recipe behind it, or rather, if you could just give some insights into the investment management processes as well.
It's not a secret recipe or anything. It is simply following prudent practices. There can't be any secret recipes in today's day and age. Everything is out there, published in the open. So what we focused on was stock selection. We invested in our best conviction bets. We identified top-down themes which we felt will do better for the markets as well as for the Indian economy over a period of time, and took an overweight position in the best stocks in those sectors. So capitalizing on the top-down theme, which will do better, and then doing bottom-up stock selection for companies which will benefit the most from these kind of themes, as well as companies in other sectors which might not be part of these things but have their own independent potential to become multi-baggers in the future. I think combination of these two factors helped us achieve the performance. Secondly, we also had strict risk management in place so that even though we were going overweight on certain sectors, we made sure that the risk that we took was not disproportionate to the benefits on offer. So this offered us downside protection as well. And of course, the stock selection for us, what we feel is that that is something that we have focused on in the last couple of years, and that really paid off for us in a big way in the last 2 years and helped us achieve this kind of performance.
Sure. So could you also let us know in terms of what's the total team structure in terms of the equity investment management?
So apart from me, there's four other fund managers. There's a CIO. There's two dealers, four analysts, and a debt team.
Sure. Coming back to the NFO of large and mid cap, how many stocks would you probably be holding approximately in the portfolio?
So this will be on a dynamic basis, but the mandate of the fund is to have minimum 35% in
Yes.
large cap companies, 35% in mid cap companies.
Sure.
Typically, when we have a diversity in terms of investments, the portfolio size then can be 50 to 60 stocks in the portfolio.
Sure. Now, coming to the favorite question, what is your view on the equity markets more on the near term, Rohan?
So it's a very interesting place where we are poised. Some of the data which is coming in, especially globally, is not very favorable. At the same time, India's own data seems to be quite robust. We have strong GDP growth in India. We have a consistent domestic inflows coming in. Even in the month of July, for example, it was domestic institutional investors inflows were more than 23,000 crores. And post elections, now we know what kind of government is in place, what kind of policies will be there. The budget has shown that there'll be a continuity of a lot of the policies that have been introduced in the past few years. So domestically, the scenario is quite good. If we look at the global markets, as I mentioned, we had geopolitical tensions continuing for more than 2 years now. The US data was probably a bit worse than expected, and the monetary tightening by the Japanese central bank was also unexpected. So it's a combination of things where I believe that at this point of time, the Indian economy will drive the markets in the near to medium term. And as we see a global rate cut cycle then picking pace, even the export-oriented and overseas-focused companies can do well. So while the broader markets may remain range-bound, there'll be opportunities in sectors which are currently being ignored by the market, which can do better in the future. And that for us as investors who believe in top-down as well as bottom-up approach, we believe it will offer interesting opportunities to grow in the future as well. So merely looking at the broader indices might not give a fair picture. It will be stock-specific and it will be sector-specific action where returns will be followed.
Sure, but we did see the false theory of decoupling between the Indian markets and the global markets. So do you believe that any jerk in the global markets will have a very, very wide, vast effect in the Indian equity markets as well, which we saw in the previous couple of weeks?
So even if the fall in the markets was there, we have also been seeing a recovery which is quite quick.
Sure,
So
definitely.
while in today's day and age, no economy can be completely decoupled, so long as the domestic drivers are in place, the recovery can be pretty fast. A fall in the market probably cannot be avoided if there is any global contagion.
Yes.
It's how fast we recover, that is the key question. And I do believe that all the ingredients are in place for the Indian markets, or if it's further fall in, say, global GDP, even for the Indian GDP to recover much faster than what the other markets do, and even what the other emerging markets do.
Right. Perfect. No, that sounds very convincing, and of course, completely agree with your thoughts as well. So through this in conversation today, what message, Rohan, would you like to give to the advisors, the distributors, and the investors, particularly for your ITI large and mid cap fund NFO?
So as far as the large and mid cap fund NFO is concerned, what we are we'll be doing is unique in this fund is that we'll be segregating our investments in three major categories. The first will be the stable portfolio, which will be about one third of the portfolio, 30 to 40% roughly, will be the stable compounders in the portfolio.
Sure.
Then another 30 to 40% will be companies where will be more agile. The holding period might be uh, a year or two, whereas in the stable portfolio, the holding period will be 3 years or more. So this agile portfolio will help us capture the shorter term themes in the market. And lastly, 20% to 30% will be companies which will be the alpha creators over the long term. These will be the emerging themes which can play out over a 5 year time frame. So this will give outsized return as we hold on to these stocks over a period of time, so long as their story keeps on unfolding properly. So based on this, we believe that it will be a differentiated offering that will be able to give to investors. Now, as far as recommending to MFDs, what we believe is that past record firstly is not a guarantee for any future returns.
Of course.
So while evaluating any investment option, we should look at the investing style and the fund manager's track record and how it fits in the overall allocation mix. So I already mentioned the fund's investing style. The track record is there for everyone to see for the fund managers in the past couple of years. And once again, reiterating that it's not any guarantee for future returns. And lastly, how it fits into the investor's overall allocation mix, that probably the MFD will have to determine with the investor himself or herself.
Sure.
Right. So the ITI large and mid cap fund, through its active portfolio style, we believe that it can create a very durable portfolio for the long term holdings, and it can create wealth over market cycles as well for investors. So stable companies, agile companies, emerging themes, I think this should be a good option for being considered in the core portfolio of investors.
Yes, I agree. And in the past, of course, it has given those sort of returns if somebody held their investments for a longer term period. That's true.
Absolutely.
So fantastic, Rohan. Thank you so much. So, well, for the viewers, this is Mr. Rohan Korde, Fund Manager Equity with ITI Mutual Fund, telling us about their new fund offer, ITI Large and Mid Cap, which opens on 21st of August this month and closes on 4th of September. So thank you very much, Rohan, for joining in today and taking us through about your investment management journey, your investment management process, your views on the market, specifically, the crisper views about the short term, the near term equity. That was very, very interesting. And we wish you and ITI Mutual Fund the very best for this ITI Large and Mid Cap Fund NFO.
Thank you so much, and thank you for having me over. My pleasure.
Thank you very much for your time.
Thank you.
Bye-bye, Rohan. Thank you.